Hello, everybody. Thank you for tuning in to the Spiders preview. Coming to you from a very cold New England, where we're once again going to root for the Patriots this weekend. Well, yeah, I know. Before I get the hate mail, this is New England, and this is where I grew up. So, anyway, let's take a look at the markets. It's important to remember that the Fed decision is later today, so that's going to give us some volatility. I don't know which way, but just keep that in the calculations because usually a lot of times when news comes out like that, there's a big move, but the next day or two it reverts. So I'd wait a day or two to see how it shakes out. So as we all know that in financial markets, there are certain levels that are more important than others. You don't need to be a chart guru to see that. And again, you don't need to be a chart guru to see that in financial markets, prices are always doing one of three things. They're either going up, going down, or staying the same. So if you understand this and you have awareness of this and you have the ability to identify these dynamics, you can make a lot of money. So stay away from things like Gann theory and harmonic charts. You know, if you want to think about or entertain yourself around 10, 11 o'clock at night, maybe you could watch the X-Files or some show about ancient astronauts, which actually I'm really kind of upset that the History Channel shows ancient astronauts shows now. So it's really not the History Channel anymore. It's the science fiction channel, I guess. All right. So anyway, all right. This is just an overview. All right. So anyway, so here's the S&P for the last 3 months, and you can really see that it's really gone nowhere. Okay. This is that big uptrend we have. This is that big move we had. Like this was the most oversold that the S&P has been since 2011, which I've been talking about the last few pieces. Then we had that big move. But anyway, so we've been in an uptrend since then. Well, we were in an uptrend, but that broke and we've just been trading sideways. It's pretty interesting how important this 263 level is. Look how precise that is. 263, like right there, right there, right there, right there. Here's the longer term view. So if we head lower, I mean, again, I don't know what the Fed's going to say, but if we head lower, pay attention to this 260 level because everyone in the RAM area is watching that. This was where the lows were back here. So I would keep an eye on this. If the 260 level breaks to the downside, we could be looking at another meaningful sell-off. You could see how we're kind of overbought right now. A lot of times well, I don't want to comment on the Fed, but I was going to say a lot of times when the Fed makes a statement, markets rally just because it gets rid of the uncertainty. But we don't know that yet. I guess the real key is the interest rates, right? I mean, we always talk about how things like the trade war, Senator Kavanaugh, Mr. Judge Kavanaugh, blah, blah, blah. On the TV, all they do is talk about these stupid, inane reasons why the market's going up and down, and they're always wrong. But interest rates do affect the market. That's one of the things you really need to pay attention to. So because the economy was doing well, there was kind of this feeling that interest rates were going to go up. So if the Fed comes out and gives a feeling that they're done cutting rates, or they may even, or I'm sorry, I've said that. If they're done raising rates, or they're going to keep rates the same, that's going to be bullish for the market. This is what I mentioned before about the rally we had a month or so ago. You can see the S&P was the most oversold it's been since 2011. So anytime you get a technical indicator to extreme like that, you really need to pay attention. And the key here is, too many people try to catch the bottom. You got to wait for it to break the the downtrend and catch it on the upside. If you're trying to catch the bottom, you're just guessing. This is the technology sector, and this is the biggest part of the S&P. I think it's about 30% of it. So you can see it's kind of trading in tandem. So it's broken its uptrend, trading sideways. The 6350 level is important. It was important back here. It's where the exact bottom was in November. This is the technology sector, but this is a 3-month chart. So you could see, right? That's right at 6350. That's where that bottom was. It was resistance for like a week. Now it's been the bottom of the range for like 2 weeks. But you can see we're just trading sideways. This is the financials. I talked a lot about this 25 level because it goes back a few years of its importance, or where it's been important, but kind of just blew right through it. Now, guess what? 26 is important. It's kind of funny how, as a technician, ever since all these ETFs came out, it makes life easier because these things literally just trade the round levels. I mean, look at this, right? It got down to exactly 25. How can you explain that from an academic or evaluation point of view? The basket of equities that make up the index that this is based on just happen to exactly equal $25. So anyway, we're just kind of trading sideways below this 26 level. This is the healthcare sector. And I always like to point out how levels are important. And that's the whole reason why you're listening to me, because if you understand that there are certain levels that are more important than others and that things trade in trends, you can make money. Now look at this 96 level, right? This was the all-time high here. Then that was in, I guess, October. And then like to the penny almost in December, got up to the same level. So I would ask you to ask one of your academic or random walk friends to explain that. So anyway, we broke above this level. Just been trading sideways between 88 and 90. I think if we head lower, we're going to see some support here again. Probably not as significant as it was before. If we go higher, there's kind of a whole hodgepodge of what's going to be resistance in here. So I don't expect sharp move upward, but then again, that's how markets act. Markets go up slowly and they go down fast. And the reason why is because markets go up on hope and they go down on fear. And hope is fear is a much stronger emotion than hope. So, I mean, this is so typical, and this has been going on in markets since there's been markets. Slow on the way up, then so now we're going slow on the way up. So anyway, this is not unusual to see this kind of supply overhead in market situations like this. And, if it's going to go up, it's not going to go like that. It's going to go like that. But anyway, this is what I'm watching, just 90 and 88, just watching this range. And if they break out to the upside, maybe we start thinking about going long. If they break to the downside, maybe we start thinking about going short. This is consumer discretionary. This has also been consolidating over the past few weeks, right around the 106 level. If it heads lower, I would think there might be some support around here, 98.50, because this is where the bottom was over here. And I know it's hard to see, but it spent like a week consolidating there before it rallied. This is kind of interesting here. The 71 level in the XLIs, the industrials we've been watching for a while. There's a bottom here, and then, it's kind of the bottom there, and we're currently testing it right now. I think today's close or yesterday's close like 70.28 or something. So just something to keep an eye on. If the markets do rally after this Fed decision, I would be watching to see how this reacts, because this could be indicative of what the broader markets are going to do. I mean, if this level clearly breaks, that's going to be bullish, because keep in mind this is industrials and it's tied in, the Dow Jones Industrials is what most retail investors watch. So once they're on board, it's time to start thinking. Again, another example of important levels. Staples 52 is the low in October, and we've been consolidating around 52 for pretty much 3 weeks now. Longer term, the staples have the 50 levels are very important, right? So it was the top throughout most of 2015. It was the low over 2.5 years ago in September. This is last May, and this is where it recently turned. Now keep in mind this is a weekly chart, and we're looking at a 5-year chart here. So it's not that precise. And people, you might say like, well, gee, Mark, that's all fine and dandy. How the hell am I going to make money off it? Well, I'm just saying in general, if you want to sell something and you believe you should sell it and you're at resistance, fire it out, get rid of it. If you want to sell something and you're at support and the market's oversold, well, you can wait, because it's probably going to rebound a little bit. And vice versa, if you want to buy something and it's at resistance and it's overbought, you could probably wait a while. If it's at support and it's not overbought, you could step in and get a really good entry price. I hope I said all that right. I've had a long day, and I'm sorry for my bad voice. I had a really bad flu over the weekend. I usually don't get sick. I haven't been this sick in like 3 or 4 years. I literally had me and my wife, we took the dog for a hike. I got home, I made a fire in the fireplace, and that was about 6 o'clock. I sat down, and by 9 o'clock, I had like a fever that was raging. And there just happened to be a show on about how these parasites that live in raccoons, like, get into your body and make you really sick, and somehow the parasite forms a worm in your eye. So that's what we watched. So of course my wife freaked out when we got home, but rest assured everyone, I am fine. Might not sound that well, but I'm fine. So anyway, so here's energy consolidating. Here's another one. Broke this uptrend. And remember, uptrends and downtrends, they're nothing, the lines are not magical. It's just a graphical illustration of who's in control, the forces of supply or demand. So forces of demand are in some control. All of a sudden it breaks, they become equalized, and now we're trading sideways, which means the forces of supply and demand are equalized. This chart clearly shows how there are levels that are more important than others. Now look at this 7A level. I mean, that's what, September of 2017, January of 18, May. I mean, look at that. Look at that. Random walk down Wall Street, my ass. I mean, there are certain levels that are more important than others. You don't need to be a chart guru to see that. And here's a perfect example of a downtrend. So forces of supply are in control, and control, and control, and control. Now we get down here. All of a sudden, the forces of demand take over. So if you understand these dynamics, and not just try to put some, magical, mythical, uh, I don't know, whatever behind a pattern, then you can make money. The trouble with most technical analysts is that they suck. But the reason why they suck is because they don't understand that these patterns actually are supposed to mean something. And if they're used correctly, they're supposed to illustrate supply and demand dynamics. And as you know, if you understand those dynamics, you can make money. Most technical analysis, it's like UFOs and Bigfoot, right? Going back to that. Here's the material sector. Pretty boring, but it's actually testing this 54 level, which was the top through the pretty much the spring of 17, and then the bottom through the summer. All right, and then last but not least, utilities. We've been talking about this 52 level for a while. It was the peak there, it was the bottom here, the bottom here, and yet once again it was the bottom. So we've broken the downtrend, trading sideways. If we head lower, we're going to look for support around here. Oh, so boring, these utilities. All right, well, that's pretty much it, everyone. Thanks for tuning in. Sorry if my voice is annoying you. You all know where to reach me if you have any questions. And I will probably get the Weebly report out pretty soon. But until then, happy trading and have a good night or a good week.